Most economists now refer to it as the Great Recession, as opposed to the Great Depression. But the interesting, I would say the encouraging thing is that when you look at some of the tourism flows, and South Africa actually is a good example, you are seeing in many cases a revival towards the end of 2009 and in 2010, insofar as we do have data for most of 2010, which would suggest that whereas the sector is very sensitive to what happens in the global economy, it also does recover fairly quickly in a global economic recovery. That wasn't a given, because in many of the traditional tourism spending countries, where you can think of Germany, for instance, the United States, France, the UK, you are dealing with sequels of the recession, which might last for a while, sequels of the financial crisis in terms of reluctance of businesses to hire new people, which means that your job market, your job certainty is reduced. Your debt levels, household debt levels, and the cost of servicing that debt is high. Fiscal policy has got to be tightened. It means generally that welfare benefits are being trimmed and taxes are being raised. So it is quite remarkable to a certain extent that the tourism sector and tourism spending has already recovered, whereas some components of household demand, for instance, demand for new houses, is lagging. Now, I'd say it's encouraging, but it still raises some question mark for the future. We might not have seen a big impact yet. We might be seeing a recovery in tourism flows, but how long will it last? Will it be a different plane? Will it be a different path than what we've seen before? Will tourists from the traditional tourism spending countries, Europe, the United States, trade down? Will they seek for greater bargains? Will there be more conscious of the cost, for instance, when it involves traveling to a distant destination? And there, for Africa it is important, because Africa, especially Southern Africa, is not close to any of the traditional big economies. You got to travel quite far to get there. Now, about Africa, the encouraging thing is that tourism to sub-Saharan Africa, I'm not mentioning South Africa there because South Africa was a bit of an exception, but sub-Saharan Africa as a whole, tourism did not during 2009, just like the local economy did not fall. So obviously you have a structural improvement exceeded the cyclical decline that was related to the tourism problem. So obviously the investments in infrastructure, the marketing efforts seem to be bearing fruit. But you cannot rest on your laurels. And there are two important things to bear in mind. One is that you need to, one is the fragility of your competitive advantage when it comes to tourism. We know that for many traditional tourism spenders, for Europe, for the United States, the environmental quality of tourism in Africa, the pristine nature, the wilderness area, the wilderness concept, added of course to the cultural concept. I'm not saying that Africa is a wild destination. It is not. It is a destination where people live. It is a destination where people work. It is a country, these are countries that are developing, but at the same time it has a special quality which makes its attractiveness. So you have to reconcile the maintaining of that special quality together with imperatives about development, and that might involve mining, that might involve infrastructure, and in plenty of cases, you know, where you have to make a decision. Do you mine in an area, do you build a new road, or do you maintain it relatively unspoiled and bank on tourism? And the last thing, and you alluded to it, Trevor, was the fact that political developments, which tend to be sometimes ignored, you know, the norm in economics and financial markets the last 10, 15 years was say, oh, political risk doesn't really matter, you know. At the end of the day, you have elections, you have governments, but as long as I maintain a relatively investor-friendly climate, that doesn't really matter who's in power, which party wins the election. What we're seeing now in the Middle East and North Africa is extremely challenging. It means that the political risk premium, the political element has to return in the risk premium. You cannot just say, well, this is a country where the macro environment is stable, so it doesn't matter that there's 30% unemployed people and big inequalities and that there's boiling discontent among the population. The lesson is at some point it can create a big upheaval, and in the near term at least, this upheaval can easily put off tourists. Now that can be an advantage for countries further south of in Africa, south of the Sahara, to show basically, well, we may also be developing countries with problems of poverty, problems of inequality, but we have the correct institutions to handle protests, to handle these issues, and therefore we offer a more stable environment, we offer a more visitor-friendly environment, which means that, well, instead of going to Egypt, or instead of going to Libya, or even instead of going to Morocco, because Morocco is a bit dangerously close to the foyer of tension, why don't you come to Mozambique, or South Africa, or Angola, or Zimbabwe for that matter?
Yeah, but if I can interrupt that, does the international investment community look at what's happening in Algeria, Libya, Tunisia, Egypt, and say, that's Africa, that's now off the agenda? Or can the investment community, I'm not just talking tourism, but generally, can they actually differentiate between North Africa, which I tend to describe as a different world from Sub-Saharan Africa? Can they differentiate? Will
Yes.
they say, okay, forget that, we'll go further south?
Yes, no, increasingly. Well, it depends. Of course, if you mention some tourists, will be put off by what's happened in North Africa. They think, I don't want to touch Africa. But generally, the investor community, people who make decisions about businesses, about returns on their investment over several years, they start to differentiate. Even within smaller regions. I'm sorry to the Minister of Tourism from Zimbabwe for mentioning the case of this country, but about 10 years ago when upheaval first took place in Zimbabwe, South African financial markets were being punished because of the proximity, because of some common traits in history. Now, after several years, increasingly you found that, yes, markets, people who were invested in Zimbabwe or people who were interested in Zimbabwe kept looking at Zimbabwe, but those who assessed South African political risk started looking at it differently. I mean, increasingly, global investors, and you're talking there about either financial investors or direct investors, businesses who bring in the money to open a new factory, to open a new hotel chain, look at the developments country per country. Mozambique doesn't have the same political and social dynamics as Uganda. Kenya has had issues which you cannot equate to what you've seen in Ghana, for instance.
Doing business in Africa, you can't afford to be without Africa Investor.